I'm Peter Gordon with U.S. Bank, and I'm responsible for enterprise payments here at U.S. Bank. These payments really go across commercial, small business, our retail bank, and our global merchant processing business, Elevon. And my responsibilities are to look at how we can leverage real-time payments to help our consumers, our small business, and our corporate customers. And today I'm really excited to talk to you and have a panel of professionals to talk about the challenges and what they think of how we will really take advantage of this 24/7, 365 data-rich real-time payment environment, especially in this post-COVID world. I'm really excited here to talk about how we're going to drive real-time payments here in the U.S. I have a great panel for you today. We have Troy Hagee from KPMG, who has experience of accelerating faster payments across the U.S. Doug Cox, who is with IBM, leads and the general manager for IBM's FTM platform, Financial Transaction Manager, and he's providing infrastructure both here in the U.S. and across the globe for enabling real-time payments. We have Jordan Reynolds from Elevon, U.S. Bank's merchant processor, and going to talk about how we can really drive, help merchants using real-time payments. And then we're fortunate to have Alex Pinto from Actimize from Brazil, and he's going to discuss how Brazil's evolving and the lessons we can learn from as they launch their real-time payment network. So a few opening comments I want to make about real-time payments. First, I think the most important thing as we talk about real-time payments, we obviously we're in a pandemic and the COVID world. The question I get asked a lot is, has anything changed in the COVID environment? And the answer is, I would say yes and no. I would say no in the fact that it's been the same strategy that most of us on the phone, these panelists have been driving. Yes in the fact it's accelerated. It's just accelerated our strategies on how real-time payments is needed in the U.S. and across the globe, and so how it will reach our customers. And I think about the benefits to consumers. We see even getting government support payments to consumers. We see the acceleration. We'll talk a lot today about how Zelle and how people are doing social sharing of their groceries using Zelle, and some really exciting things as we evolve with real-time payments. So with that, we're going to talk about some of the strategic directions, and I'll turn it over to Doug Cox to kick it off from here. Doug?
Thanks, Peter. I'm really happy to be here and excited to talk about this emerging space that we're really driving together. IBM has a long history and a proven track record of innovation and 20 years in payment processing, but there's never been a more exciting time to be in payments. We're working with partners and clients around the world to really accelerate real-time payments. And as we moved into real-time payments, there's one consistent need that we see, and some of that is being driven by this new COVID world, really turbocharging, the transition to payments, but we really are seeing an aggressive shift to real-time payments. And as part of that, we are aggressively, transitioning our offerings around and leveraging the IBM's hybrid cloud technology powered by containers and Red Hat OpenShift. And this technology is going to enable our clients to seamlessly integrate to private clouds, as well as leverage other external clouds for scale. People are expecting payments to be done digitally, and as often it happens, what people are capable of doing personally raises the expectations in all aspects of the business. Why can't we pay everyone, our suppliers, our financial institutions, government, with real-time payments? And in fact, one of our clients actually leveraged our FTM platform to process CARE Act payments in real time, demonstrating the power of real-time payments and getting a huge boost in client satisfaction. There's nothing like getting your payments on 4th of July weekend. Businesses stand to gain much more than just the obvious customer satisfaction. Real-time payments enables true simplification of the payment process, as the ISO 20022 enables payments and invoices to travel together, eliminating a reconciliation issue, allowing immediate payment confirmations, as well as requests for payments, which really opens up brand new client experiences. Real-time payments are growing at rates approaching 50%. We're even seeing this in all aspects of our engagement, with significant demand around our safer payment offerings to secure those real-time transactions. And as we scale and grow the solutions, we'll leverage AI technology to better serve our clients, support our infrastructure, as well as extract greater business insights. Our new platforms will leverage our Cloud Pak for data, which will have AI pre-integrated to take advantage of all aspects of the data of our payments platform. Clients are also using our Watson Assistant, which has already been trained for COVID-19 responses with data from the CDC, but can also be leveraged to provide support, improve satisfaction for your clients, and offload your CSRs to handle more high-value client calls. Finally, like many of you, we're on this journey. For example, even our ACH offerings, which once had 90% large batches versus small batch transactions, our latest data shows that the current trends are demonstrated 90% small batches. We're making our updates to our technology and our roadmaps to respond and ultimately transform all of our platforms for real-time payments in this new normal. Jordan, what are your thoughts?
Thanks, Doug. As I think about it, we, sitting in a merchant acquirer processor, we look at a couple of different use cases to expand the use of real-time payments. The first is really around merchant settlement. And as we think about merchant settlement, that's the process with which a merchant accepts card payments, accepts a form of payment from a customer or consumer, and then on the back end, they have to get their funds moved into their bank account. And so that's one use case that I'll talk a little bit more about that we're really razor focused on. The second is merchant disbursements to consumers. So a merchant's ability to make a payment to a consumer, whether that be in the insurance space, whether that be in the airline space, there's multiple verticals that we're looking at. But specifically on the settlement front, as we think about where we've been and where we're headed, historically, we've settled with merchants using the ACH rails. And historically, 10 years ago, it was 2-day ACH. Recently, it's been next day and same day. But with the advent of real-time payments, it gives us the ability to settle 7 days a week with the merchant anytime. And that's where there's real power for real-time payments. And as we've started rolling this out, so US Bank and Elevon have rolled this capability out to our merchant base in June of this year, we've seen a massive pent-up demand. And we've seen a pent-up demand, particularly in the small business space, because small businesses in a COVID world, they've always needed access to cash, access to liquidity. But I think COVID's really accelerated some of that in terms of need, in terms of demand. And so we've been able to really tap into that and provide a solution that works using a network that provides real-time payments, is on our own banking infrastructure, and can provide a very cost-effective solution for us to settle with merchants. So, we're addressing a big customer need and customer pain point, which is how do I drive liquidity faster? And at the same time, being able to use existing infrastructure with the bank and reuse technology that we've developed across different use cases beyond just merchant acquiring. With that, back to you, Peter.
That's really great, Jordan and Doug. I couldn't agree more. I think the acceleration of COVID has really accelerated everything we do and the hard work we've been putting in over the last few years. So now we're going to move over to one of the use cases. We're going to talk about consumer bill pay. And consumer bill pay and what's the opportunity with real-time payments and what does that really mean? And you heard you heard Jordan talk about liquidity to small businesses. Now think about liquidity to consumers and how consumers in this world need their money. They want to manage their money in an even way, whether it's paycheck to paycheck or smoothing out, just like companies want to smooth out their cash flows, consumers want to smooth out their cash flows. And so what real-time payments allows consumers to do is pay when they want it. But I'll really want to focus on something, again, we're in this environment where real time is really important. 24/7, 365 is about real time. But the thing that we don't talk about that's not well understood is the data underneath. And the data is what allows us to simply, if you're a consumer, get information from your biller, how much you owe and when you owe it. If you think about it, you don't get that real-time information today in the US. You have to type it, you have to go to the biller's website and get the information. You get a paper remittance advice in, a bill in your mailbox. I don't consider that real time today, especially not in this digital world. You may get a mobile alert on your phone that says your payment is due, but it may not be current. What real-time payments allows us to create the pipes that makes the connections from the biller to the consumer. And that's what's going to change. And so I think how real-time payments, and this is really what what's taking long in the US. Something to remember, and we'll talk about it more, is that this is a commercially driven effort. Outside the US, we have regulatory driven efforts, as Alex will talk later in Brazil, how India has used real-time payments to accelerate how consumers pay. But because we have multiple commercial entities driving it, we hope to get a better, more robust solution, but it will take longer. And that longer is making the connections to the billers to create that data to flow from legacy systems, that information simply is how much you owe and when you owe it, to a beautiful user interface in somebody's mobile application. And that just takes time in the US and building up the infrastructure as the data goes. So how real-time payments will really exceed, it has to be good for the billers. So in this case, it's lower cost, it's better way to communicate to your customers. For the consumer, you get back, it comes right out of your bank account and you get how much you owe, when you owe it, and you get an instant acknowledgement that it's been received by the biller, really critical. And then for the banks and the billers, there's something that we call reconciliation. And for those payment people who may not know this, this is the really ugly way of how businesses have to manage between the banks and the billers. You get all your information. So if you had 1,000 payments yesterday from that your consumers paid you, you have to reconcile that to your bank statement, just like you would as a consumer. Well, businesses do that every day. And what real-time payments does takes that reconciliation process from being a process to, this is really important, that the data and the payment become the same. And so there's no reconciliation. Really taking billions of dollars out of the process is what we look at. So real-time payments is something that is going to accelerate over the next 3 years because it has opportunities for consumers, for banks, and for the billers themselves. So with that, I'm going to turn it over to Troy, who will highlight some of the work he's been doing in the space. Troy?
Yeah, thanks, Peter, and agree with all of your comments. Real-time payments and even more additionally, request for pay is really driving a lot of change in the bill pay environment. It's ripe for disruption, and it has been for a number of years, due to the problems you talked about and the fragmented environment that we sit in. Of the roughly 14.7 bills that are paid by consumers, nearly half of those are regular payments around utilities, cell phones, those types of things. And it's a fragmented environment in how you pay those bills, whether it's biller direct, logging into billers' websites, which is a problem for consumers. How do you remember your credentials for all the different bills that you pay and different websites that you have to go to? If you look at the other channels and really the bank channel, bank bill pay channel, only 25% of bills are paid via the bank website, and that's been declining and going to more of the biller direct model. We've been working with a number of clients as well as bill pay providers as they look to take advantage of real-time payments and request for pay capabilities and how that can really drive consumer choice. And that's really what it's all about, is consumer choice and how they want to pay. can you offer different mechanisms, including real-time payments and different kind of card mechanisms as well. We do believe that request for pay is a game changer in the bill pay environment, because you can flow the payment with the data and get, as a consumer, real-time response and confirmation that your bill has been paid. There are a lot of banks are making changes in this space, as well as the providers. So if you think about MasterCard, Fiserv, FIS, Zelle, TCH, all the major providers in the industry, they're all focused on bill pay capabilities and building that out to solve the friction that sits in the environment today. With that, Doug, curious to get your thoughts from your perspective.
Yeah, thank you, Troy. As I mentioned earlier, right, in this data-rich environment, in an ISO 20022 world, we'll really be able to integrate AI much more fully into the payment processes and solutions, and with an information architecture which not only utilizes the payment data, but other aspects of the client's data, we can deliver personalized recommendations, cross-sell opportunities, and really unique client experiences. And we're all familiar with leveraging AI to provide recommendations on your usage as well as your preferences. There are other abilities we can support in this new ISO payment world. One example is adding to our roadmap intelligent routing. So as FTM is a universal payment hub supporting multiple payment rails, we can leverage AI to utilize the payment data coupled with other data such as cost, availability, usage tiers, and other factors to determine not simply the least cost route, but ultimately the most beneficial route for our businesses and clients. An invoice integrated with payments will enable functionality, like you said, request for pay features, and I also envision where data integrated with the payment can be utilized to minimize or eliminate this whole checkout function, as a secondary transaction. Payment can now be seamlessly, will be as seamless as putting something in your shopping cart. No longer will we need this whole concept of filling up or pre-app, allocating your app with sufficient funds. The seamless real-time payment will happen when you walk out the door. And this will give us greater possibilities when we integrate the IoT devices, as well as leveraging different capacity needs, to make sure that we're dynamically scaling up or scaling down our payment environments for seasonal or holidays, or even in a pandemic. So, yeah, Troy, back to you.
All right, thanks, Doug. And one thing I wanted to mention, it's not all rosy, right? There are challenges coming with transforming bill pay. Really, just given the history of how banks offer it to their consumers, what are some of the obstacles that come into play, and helping banks think through some of those processes and the changes that have to happen. A lot of it has to do with how they've architected it in the past, and how do you unwind legacy processes and technology to take advantage of the real-time payments, request for pay capabilities, the user experience, consumer experience, and it really depends on how the bank has architected their bill pay solution to date. Whether they have, and one of the biggest drivers is, do they own the UI, or have they outsourced it and white labeled the UI functionality to certain providers? How do they bring that back in-house? And a lot of that is driven by taking back the consumer experience, trying to drive usage of the bank bill pay capabilities, and really depending on how they've done that'll drive the level of complexity that comes into play. And it also gives, once that happens, we're seeing banks moving more and more to multiple providers for bill pay and multiple directories, and really that's a reach thing, which is important, and that will drive adoption and ease of use of bill pay, and driving that user experience back to the bank bill pay rail. It's not without saying that's a simple feat that has to happen, but it is an important consideration as you think about banks taking control back to driving usage back to the bank's website and mobile. The other big change will be just consumer behavior, right? If they're used to going to biller websites, they're used to going to other providers, there will be an effort needed to drive consumers back to the bank experience. And we do think that request for pay and really bringing all of that together is a value proposition that the banks can take advantage of to drive consumer usage back to the bank's site. So Peter, with that, I'll hand it back to you.
Great. Troy and Doug, I completely agree. I think my real takeaway from that conversation was, we talked about real-time payments, but we didn't really talk about the real-time nature of it, because what we really focused on is the data. And I think that's really important for banks and billers to understand that that is where the journey is. That is where we need to affect both as Troy said, the pipes and the different directories that we have in the U.S. We're not going to have one single directory in the U.S. because of our commercially led effort here in the U.S. So it's going to be, again, an evolution, and really excited to see how real-time payments will be the foundation to do that and connect all those various connections, ultimately to give the consumer a better experience, give the banks better visibility of the data so they can provide services. We talked about reconciliation to the banks and to the billers, and so provide those services to make it smooth. And really, we can start designing products that allow banks to provide cash flow services to billers so they can see the cash flows, just like Jordan talked about earlier with merchants, and then consumers and how we can smooth out those flows for consumers by looking at the data flows of consumers and how much money they have in their account, when their bills are due, and providing credit products to smooth out the dips in their cash flow needs. So with that, we're going to transition to, we talked about this, and real-time payments seems up for grabs in the U.S. And we're going to transition, and we're going to hear some how Alex is working on real-time payments in Brazil. We'll talk more with Jordan on how real-time payments is evolving here in the U.S. and the use cases. And really, again, why is it up for grabs in the U.S.? I think a lot of people find it. You hear about FedNow, the Clearinghouse. So the Clearinghouse has been in market for 3 years using real-time payments. It takes time. Right now, 60% of the banks and the DDAs are connected to that network. And FedNow has announced that in the next 3 years, they'll be rolling out their network. And so, again, we'll probably have 2 networks here in the U.S. that allow banks to connect. And that's just competition is good, and commercially driven instead of regulatory driven is when you often think of why is it taking so long. I don't have to tell anyone who's watching this today that we don't have the political appetite or the will here in the U.S. to mandate anything around these real-time payments. So they're hoping all of you, everyone who's watching, will help sort it out and be part of the journey. And what I have found over my 30-year career is that it ultimately is it's a lot more painful to get there, as I've been on this journey probably here since 2014 and 15 on real-time payments. But ultimately, we should have a better solution with multiple partners, multiple providers, providing rich solutions. And that is really the power of the commercially led system we have here in the U.S. So with that, I'm going to turn it over to Alex to give us some of his thoughts. They're on the journey in real-time payments in Brazil, and they're right in the forefront of leading how in Brazil the banks and consumers are connecting. Alex?
Yes, thanks, Peter. Happy to be here. We at ActMinds, we provide core banking systems to many global banks, especially in Brazil. And as you said, we are working with the central bank here in Brazil and with other financial institutions to implement a new instant payment network. It's called PIX. That's the name of the network here. And it's interesting because it's going to connect not only the banks and credit unions, but also the fintechs and retailers. So it's a more open network, not only connecting the traditional financial institutions. And it's going to be 24/7 real time. The settlements will be real time, 24/7. And it's going to cost very little. It's going to be much cheaper than the traditional card rails probably it's going to cost less than 1 cent per 10 transactions. So basically, it's going to cost nothing for the financial institutions and the players that connect to this network. And it's going to be live in November. So we're very close to day one. It's going to be mid-November. And the interesting thing, as you mentioned here, it's a project led by the central bank. And the central bank, they have required that all the large banks, the banks with more than 500,000 accounts, they should join this network. So that's very interesting because from day one, probably 95% of Brazilians who have bank accounts will be able to use Pix for payments and for making payments and receiving payments. So this network will be born with a very large scale, and it's going to benefit, I think, a lot of players here in Brazil, especially the retailers, because as in many countries, the retailers suffers a lot with the MDRs, the acquiring fees. It's expensive to accept money, especially from credit card. And probably with Pix, with this new instant payment network, the fees will be much less than the MDRs. And also they don't have all the hassle with reconciliation that you mentioned, that Doug mentioned as well. So there will be huge cost savings for these retailers here in Brazil and probably in the US as well. So we believe that these guys will drive the adoption of the Pix. They are going to give some benefits, some chargeback, discounts for using Pix, for the consumers to use Pix to change their purchasing behavior. We believe that. And also in Brazil, the retailers are also looking to leverage the Pix to get into the financial industry. So they're starting to provide those services to their customers. So here in Brazil, all the largest retailers are not just offering a branded e-wallet, but also a digital account that their customers can get their salaries, they can make bill payments, they can make wire transfers using those digital accounts. So it's going to become a new line of business for retailers in Brazil, and they're starting to fight the traditional banks here. So we are very excited about this because we're going to have more competition here. In Brazil, we have 5 big banks, retail banks that dominate the market. So we believe that now we're going to have much more competition with this network.
Great, Alex. That was really interesting how they're driving payments and how it's different in Brazil. And we wish you the best of luck as that comes online this summer. And please keep in touch and we'll see how it evolves. So now I'm going to turn it over to Jordan and ask how it's been evolving at US Bank and with Elavon.
Yeah, thanks, Peter. You know, it's interesting, Peter. I think what I would start with is I would arc to your point around where the networks are headed. The Clearinghouse being in place for 5+ years, FedNow coming online very soon. You know, part of what we're looking at is the dependency on the ubiquity, right? And the more ubiquitous the networks are, i.e., the more that banks getting to 100% participation or 100% using the networks or connected to the networks, that's when all the use cases really open up. And that's when you can start looking at things beyond what we're talking about today. But in the merchant acquiring community, as we think about the 2 objectives that merchants have, one, which is how do I manage my liquidity, which I talked about with merchant settlement. Right now, with real-time payments, we can obviously address our merchant community that have banks with anyone who's connected to the real-time payments network. So 60% of banks, if you're a merchant, you bank with 60% of the banks out there, you're with Elavon, we can settle your transactions with real-time payments, which is great. But we want that other 40%, right? So that's kind of point one. Point two is, as we think about additional use cases and we think about using real-time payments with Zelle, for example, and at the point of sale and consumers actually making payments using the real-time payments network versus using their traditional credit card or using their traditional debit card. That's where ubiquity becomes really, really critical and important, because obviously a merchant says, I need to get paid and I need to accept any form of payment that's available. And a consumer wants to know that when they present their instrument that it's going to be accepted. So I think that that's where a lot of work and excitement, and we're looking and studying, and Peter and I, you know, we're working as teams to dig into that. So I see that as the natural evolution. At the same time, I also see traditional players like the card networks, Visa, MasterCard, are also looking at these things and also saying, how do we compete? How do we structure card products in a way to compete with real-time payments? How do we make investments in real-time payments? How do we tap into the rich data service or offer corollary products and services and solutions? So the competition is going to be fierce in the years to come. but there's a massive amount of opportunity, and so I'm really excited about where we're headed. Peter?
Yeah, really great points, Jordan. I think, you know, it just shows the excitement, and I think you bring out some huge points that it is about ubiquity. It is, and I think the Brazil market launching with basically 95% of the consumers. I should know how many people there are in Brazil, but I know it's a lot. And so, how many people in Brazil, Alex?
We have 200 million people and 120 million people with bank accounts. So there's a lot of people. Yeah.
So basically, day one, we'll have as many consumers connected to the Brazilian account as we do here in the U.S. if we had 100%. So, you know, that's really exciting. And I think that is the journey we're all on and I think the key is we need something that is good for the consumers first, right? It's consumer-led economy. It has to be good for the consumers. So what's good for the consumers? It's about getting data to them, getting them information, providing products and services on top of that banks can provide that allows them to smooth out their cash flow. It's allowing merchants and billers to have visibility and reduce their reconciliation. And banks provide also solutions, cash flow solutions for them to allow them to look at their inflows and outflows and provide better merchant solutions and financing for those flows. And then the banks will participate in that by really bring things back at the center of where your money is and the financial institutions that serve both the consumers, corporates, and small business. So we're really excited on the journey. All of us have been on the journey for a while and really looking forward. The next 5 years should be exciting. Hopefully we all get some sleep because I know every day is something new's happening. I really think the panel was fantastic, and thank you for all your insights, Doug, Troy, Jordan, and Alex. Really exciting to see where real-time payments are going and help everyone understand how we can take advantage of it going forward. That was a really great panel, everyone. Really great information, and glad you guys have provided good support. Now I'm going to just open up to a few questions that I've gotten. And I think really interesting, and it sounds like we're going through a lot of change. And with that change, we know, if anything we've learned in 2020 is change. You know, none of us envisioned this pandemic. None of us envisioned us doing this panel. I would love to have seen you guys in Chicago and actually seen you in person, and yet I'm seeing you in the glass. So with that, that's all this stuff sounds like there will be a lot of change, and with change, there's people and transformation. And maybe if I'll talk to both Troy and Jordan. Troy, talk to me about how banks and businesses and people should think about how to deal with this digital transformation and this real-time payments transformation from a cultural perspective.
Sure, and Peter's been really interesting, and it's a good time to be a payment nerd because there is a lot of transformation and change happening. We are seeing, you know, a definite shift in our banking clients and how they look at their payments business. You know, traditionally it's been very siloed. You know, you have consumer bank, retail bank, small business, business banking, and then on the other side you've got your treasury business, your cash management business, that they didn't really talk. And we're really seeing the banks push to more of an enterprise function as it relates to payments and how they bring it together. And really a lot of it driven by real-time payments and what the flow is, you know, from a consumer perspective and a commercial bank perspective. So it's been fascinating to see. Some banks are further along in that journey of really, you know, tearing down the walls between the different parts of the bank because of all the transformation happening with the payments. And we believe that, you know, those that are looking at it enterprise-wide are those that are going to, you know, have an advantage over those that stick within their silos. But it's been a fascinating culture change and definitely a different way for banks to think about, you know, how their money movement happens across all their different client bases and how that converges.
Sure, that's really interesting. And as you know, I'm living it every day in my enterprise role across U.S. Bank. But I'll ask Jordan to provide some color on, you know, at Elevon and U.S. Bank, how are we going about some of this digital transformation?
Absolutely, Peter. It's interesting because I think of payments as sitting at the intersection between so many different groups and so many different objectives, whether that be large corporates that have global treasury management needs and merchant acquiring, and card issuance from a corporate card, commercial card perspective, down to consumers and consumers making payments. And you have overlap across all these different groups, but ultimately the objective is the same, which is how do you provide a seamless experience in the money movement, the movement of money. And as I see how that's played out at US Bank, what I've seen, in my journey over the last several years at Elavon, we're seeing much better integration, much better collaboration with Peter's team on the digital side from an enterprise standpoint, and having a more connected view as we look at what our digital approach is and aligning our digital strategies so that we're all in sync about where we're headed, as well as with complementary groups like global treasury management and card issuing and consumer and retail banking and business banking, because in the merchant acquiring space we can kind of fit into each of those. We have customers in each of those segments, and we're driving more harmony in that direction. Now it's not easy, and we're trying to align agendas, but I'm optimistic in terms of where we're headed, and having a digital office and having folks like Peter on the team to help drive and steer the broader agenda that we can line up with, and then we can plug in different products and services like real-time payments to apply to our use cases, right? But we're still driving down the same path, and the ultimate move, the ultimate goal of how do we smooth out, create a frictionless and seamless money movement experience for all of our consumers.
Yeah, fantastic, Troy and Jordan. Completely agree that it really is the acceleration of all this coming together, and it can't be, to use Troy's name, can't be better to be a payments geek in this environment where I do think we're really at the convergence of digital and data and payments and banking, and so I know that's what gets us up every day to do this. So really good insight. Thanks, guys. The next question I'd like to just think about. So Jordan touched on it. It's not easy, and so there's really some challenges that we all need to think about and we've gone through. And so first, I'll turn it over to Alex and have him talk about the challenges they have as they just about to commence launching their real-time payment network in Brazil. And then I'll turn it over to Doug, and he's been working with a lot of financial institutions and others to enable these, and it'd be great to hear the challenges and things that we should think about. So Alex, tell us about some of the challenges you have and you see on the horizon.
Yes, sure. We have some very important issues to address in Brazil, and I believe that's going to be the same situation in the US. I would say that the first one has to do with the nature of the transactions, because usually in this faster networks, the transactions are irreversible. So once you send the money, it's gone. So every player needs to be very careful about mitigating identity fraud, identity theft. So everybody needs to have very effective know your customer processes using geolocation, biometrics, and so on to avoid identity theft, because it could cause a lot of financial losses and also harm the reputation of the institution. So that's a very important issue. The second one has to do with transactional fraud, of course. Here in Brazil, there are some companies that provide those anti-fraud services to the traditional card rails. They are adapting these solutions to the new payment network. So I think that's one of the ways to address this issue. And the other one is more technical, and it has to do with the 24/7 settlements. I would say that most banks are not prepared for that. They don't have the infrastructure, the capability of providing settlements at any time. So they need to upgrade their infrastructure, their legacy systems, to allow people to actually transfer money during 4th of July, for instance. So that's very important, and it's a big challenge, and we're helping the banks here in Brazil to achieve that. And the last one has to do with standards. I think we need to have some kind of standards for each method of payment. Could be QR code, could be NFC, Bluetooth, whatever, because that's very important to make it easier to other players get into this network, like the point of sale software. It's going to make much easier for them if you have standards for the QR codes or NFC. It's going to make easier for the consumers to change their behavior because you're going to have a consistent user experience for payments. So I think it's very important to work on standards for the end user, the payments itself, the method of payments itself. And anyway, I would say that we are very excited in Brazil because we see the potential of distant payment networks. It's pretty much like the internet had with the society. Because I would say that back in the 70s, people have established some standards, protocol standards for communication. And since then, we saw a lot of companies implementing business model upon these basic communication protocols. Companies like Amazon, Google, Netflix, Spotify, and so on. And I'm sure that those people who defined the standards back in the 70s have no idea that this kind of companies will emerge. And I think that could happen also with the instant payment networks, because then all the companies could innovate upon this basic infrastructure. But for this to happen, it's important to have some standards. It needs to be open to the small players, to the fintechs, to the startups. It has to provide a low cost of operation, like it happened with the internet. So my hope with the projects in the US is that you manage to get through some kind of agreement and the networks to integrate with themselves, to interact with themselves in a smooth way. So then maybe we'll be able to see the same phenomenon that happened with the internet, with the payment networks, and maybe in 4 or 5 years, there will be very innovative business model implemented over this network.
Alex, some really good points. I believe strongly in standards and interoperability, and we sit at the forefront. I'm fortunate to participate with the Clearinghouse, and since 2015 been part of the Fed task force that has put out the first standards on and the guidelines for interoperability. And being we have commercially led entities in the U.S., it's going to take longer, but I know we'll get there just like we have in the other payment networks. It's going to take a little longer. Doug, what are you seeing the challenges are to that?
Yeah, Peter, I mean, I agree with Alex and Troy and Jordan. A lot of the challenges, we work with both, central banks and regional banks, around the world. But and I think Alex and you said it right? I mean, there's a set of capabilities and processes that we're working with each of these institutions on. And as we move to, 24/7 by 365 on all aspects of the payment processes, there's a lot of transformation. And what I have found is that although, at the high level, all of those payment types, there's a standard and everyone adheres to that standard. But when you get to each one of these institutions, right, it is very, very complex. And, given the importance of this aspect of the business, as, Jordan and Alex and Troy said, it is so critical that we make these changes and these integrations and this transformation to real time in very much of a well thought out and strategic way that allows, the bank to scale and be successful. So that's some of the key things that I have seen. It is really, really exciting, and the growth is exploding. I have all the payment rails, and so, I'll say some of our legacy and check processing that we're seeing, is really, really declining as people shift to digital. But, all of those businesses are essential. And as we move to digital, every aspect of that has to be settled in real time. And whether it's the fraud aspect, was like safer payments that we talked about, or other critical business processes, all of those have to be able to adapt and scale to this new, this new normal. So it's exciting, but also is very much of a challenge. And we're happy to support, our clients and partners as we go on this journey.
Well, I'm going to close. That's really insightful, Doug. I'm going to really close by first thanking each of you, Doug, Troy, Jordan, and Alex, for a great panel session today, really providing some information on what some of the challenges are. It's not easy, but we're all hopeful in why we're here and the work that needs to be done to really improve how businesses work, how consumers can get a better experience by simply getting the data for how much they owe, when they owe it, and then be able to get back that instant acknowledgement. And then have a service that can be used 24/7, 365, as Alex pointed out, whether it's on a Saturday, a Sunday, or Christmas or a holiday. And you think, well, and some people may not understand it fully. Banks, that matters to them as well because there's liquidity. If the systems aren't running 24/7, you know, in this pandemic environment, if things stop in the middle of the night and we have issues, that causes systemic risk for the whole system. And so having 24/7, 365, it's the payment geeky stuff that keeps us up at night, actually. And so really, it's there's something in this for everyone. Is why we're so excited. There's data to allow consumers to get better. There's data allowed for the fraud to ensure fraud doesn't happen that Alex talked about. There's data that allows small businesses, as Jordan pointed out, to get back that information. And I think Troy brought up a really great point around the cultural transformation that this is going to have and is having as we move to real-time payments. So I'll just close in this crazy 2020 pandemic environment that real-time payments is only accelerating, and change, as we all know, on a daily basis, we have to pivot, whether it's doing this call remotely or thinking differently. So real-time payments is a tool that will take us into the next generation. So thanks, everyone, and have a great day.